involves a 90-day pause on most tariffs, with US reducing tariffs on Chinese goods from a whopping 145% to 30% and China lowering theirs from 125% to 10%. What does it mean for India? Well, the US-China trade deal is neither wholly good or bad for India. It presents a mixed outlook. Short-term risks include reduced export demand in the US market, potential investment diversion to China, and a pressure with respect to US-India trade talks. Long-term opportunities lie in leveraging India's tariff advantage along with diversification of supply chains. Remember, the deal's temporary nature, which is of 90 days, adds uncertainty, and its extension or expiration will significantly influence India's position. For now, India's export competitiveness is less impacted than rivals like Vietnam, but sustained Chinese dominance could erode recent gains. India can now use the 90-day window to strengthen its US trade negotiations and domestic manufacturing to maximize benefits and minimize risks. Overall, the big questions we're asking tonight on the show, well, what's the larger impact that India could see and how significant it'll be? To unpack that in terms of the overall impact, we're now joined by Manoj Joshi, who's a distinguished fellow ORF, and Sunil Subramaniam, market expert. Thank you very much, gentlemen, for joining us here on ET Now. First things first, let me come to you, Mr. Joshi. Seeing the back and forth that's happened between US and China, did this come as a surprise given that Donald Trump's decided to climb down? How do you expect this collaboration between US and China to shape up, given that this deal has in fact been signed for a period of 90 days?
Well, I think, Trump has been hinting for some time that he was ready to make a deal with China. In fact, he almost sounded desperate for Xi Jinping to call him, and he kept on claiming that she had called him. But actually, the arrangement was worked out in Washington, D.C. Between the Treasury Secretary Scott Bessent and the Chinese Finance Minister Lan Huan, when they had gone for the spring meetings of the IMF. And at the spring meeting, they met secretly in the basement of IMF, and they worked out this deal, which was eventually announced by the Vice Premier of China and Bessent. So both sides have wanted a deal. Neither side wanted to appear as though they have given in to the other side. And so obviously the big question is, who blinked first? And I think that it is the US that blinked, because the US had taken tariffs to levels which were, which had literally meant that no trade could take place. Meaning when you were putting 160% tariffs on China, that means no effective trade could take place between the two countries. So the policy itself was, self-destructive. And so the US had to blink, and now both sides have reduced their tariffs by about 115% each. And but of course, by threatening China with high tariffs, Trump, I think, has been able to extract concessions from Beijing. Because as of now, Beijing has agreed to not only reduce tariffs, but also remove its barriers to the export of critical minerals. Also, that Boeing blockade, meaning they had stopped taking Boeing aircraft, that has been lifted. So there has been a shift from that point of view. But this is only a ceasefire. So ceasefire, now there comes the hard negotiation.
Yes.
And on the consequences of the hard negotiation will depend on the geopolitical consequences on countries like India. And I personally think
absolutely,
that,
Mr. Joshi, not just the geopolitical consequences, but the not just geopolitical consequences, Mr. Joshi, but the geo-economic consequences as well. As in fact, very many market experts and economists were predicting that the US economy is going to face a slowdown, it's going to face a recession, and the impacts will be felt by all. On that point, let me come to you, Mr. Sunil Subramaniam. Of course, now the bigger question is, what's the stance that US-China will take post this 90 90-day reprieve. There is a reprieve has come in not just for traders, but of course for the global economy. But what are we to expect after this 90-day period ends?
So I think that before we go to the 90 days end, I think this also fits a part of a plan because when these tariffs were announced, they were ridiculous as far as China was concerned. And there was no way this was a sustainable thing to go forward, right? And one of the things to look at here is Mr. Trump's own thought process. And I draw your attention to the book that he co-authored way back in 1987, The Art of Making a Deal, and where he clearly states that when he wants to go into a business proposition, he always sets ridiculous demands and then shocks the opposition. And finally, when they come to settle what he originally had in mind, it's easy to achieve because they feel it's a relief and it's a win-win. So I think that's the classic case here in terms of what he's done with China. He's made ridiculous things so that the Chinese come to the negotiating table. But I agree with Professor Joshi here that ultimately it's the Trump and America which have been forced to give in because of the backlash, both on Boeing and others. But it also shows his pragmatic nature that ultimately he wants to come and close out a deal at a benefit to himself. So if you see, even the British-US deal has been largely viewed as Britain succumbing to the US. So I think what he's going to do is, this indicates that I think that most countries across the world, before Christmas, Mr. Trump will end up clearing this whole tariff situation and walking away with whatever he can get. And bearing in mind that US has $3 trillion of imports, right? Even if you are talking about an average 20% tariff, you're talking about a $600 billion tariff income to the United States, which will help his fiscal deficit a lot. So I'm of the view that ultimately this is something that will be solved by this year end. And as far as India is concerned here, see, while these tariffs were in the thought process of being implemented, we looked at it and said, oh, we are getting less tariffs than in Indonesia, Vietnam, China, etc., etc. But I think in a realistic world, it would be a uniformish tariff for most countries. Maybe China will be a little bit higher. So to that extent, our long-term sustenance is not on taking advantage of savings in tariff, but to strike a good deal on the bilateral trade agreement.
Right.
And there I draw your attention to Mr. Modi's visit to the US, where they're already laid down the goalpost saying from $190 billion, US-India trade would more than double to $500 billion by 2030. So India's path forward is not necessarily to seek a concession as much as to grow the business, right? And there, if you see, one of the astras that India has is the fact that the US is worried about the trade deficit with India, right? And that one can be resolved by India buying oil and energy from the US or high-tech defense equipment. So I think India's path is very clear. And despite the fact that Mr. Trump's stance on the ceasefire of India-Pakistan has caused some unrest, so Piyush Goyal is visiting the US next week itself to close the deal. I think India has been having engaging talks there. And so this US-China trade deal, I don't think in the medium term will affect the India-US deal because it's based on certain other things, like I said, like exports and imports from the US to India both ways, as well as China can't compete with India on the labor cost. The labor cost of India is only $1.6 per hour in manufacturing. China is at 4.2. So I still feel there's a good chance for low-end, low-skill work.
Agree. Right, sir. Right, sir. Right, sir. I agree, and I have to interject you here. When you say that, you know, the India-US deal is going to be a separate track, completely understandable given the $500 billion target that both countries have drawn up. And I'll come to that point in just a short while from now. But let me go back to Mr. Joshi. Mr. Joshi, when we talk about US-China, how close are they to sealing a final deal from the kind of commentary that's been coming in from both the United States and China? And how different is the US-China relationship going to be now as compared to the relationship that was pre-tariff days?
See, I think that, as I said, this is a ceasefire. So any kind of a permanent deal will be pretty hard fought. There'll be a lot of wrangling on both sides. And so right now, no one will declare victory. You see, till then, there will be some kind of instability. But there will be geopolitical consequences of a settlement, meaning if they settle, the bitter hostility that seemed to characterize the relationship will have to be moderated to some extent. See, we should not forget that Trump views the world in a transactional manner. Now, while his administration, like Rubio and others, are hawks on China, Trump himself is not. So they will be closely watching. And one of the things they're going to watch is how China behaves with Taiwan. So there'll be a lot of issues that we will look at. And I personally think that a US-China settlement on the trade settlement will lead to a moderation of their relationship. And this could have consequences for India, because India was hoping that we could benefit from a US-China hostility. India had some room there. India is a member of the Quad. India is one of the countries that the US was using to balance China. But if it works out its relationship with China directly, then the room for India reduces a bit. I'm only talking geopolitically. Geoeconomically, I think the sky is the limit if you can negotiate your deal with the United States correctly.
Right. Mr. Subramaniam, how do you think companies are going to be looking at that angle that Mr. Joshi is also hinting at with respect to this China plus one or supply chain diversification? Because a whole lot of companies, including Apple, are looking at boosting production from India between 25 to 30%, in the next few years. In fact, that was also a claim that was made by the company's CEO as well. So does that really ring true for India? Or will companies, do you think, will continue to reinvest in China because there is some hope of truce between US and China with respect to trade?
So I think I'd like to differentiate here between reinvesting in China versus agreeing to a tariff deal with China, right? The tariff deal with China is the way to make sure that Chinese products still come to the US and the US consumer is not having too much of an inflation. And over the medium term, US wants to get manufacturing there. I think that the manufacturing in China by an Apple or anything, those things, the China plus one started moving out of China way before this tariff problem. It started around the COVID period. That's because of two important things. One is China's shrinking labor supply. China, ever since they implemented one family, one child policy, is losing workforce labor, and from 2017 onwards. And in fact, over the next 20 years, are going to lose about 11 crore people from their workforce. So the availability of labor in China over the medium term is one of the key drivers. The second, as I mentioned earlier, is the difference in costs between China and India. I talked about it in brief. I'll tell you now that China's production cost, manufacturing, is $4.2 per hour. India's is 1.6. And this is because the per capita income of China is around $13,000. India's is yet to touch $3,000. So the cost savings and the labor supply are the reasons for this shift in labor production from China to India. And this is not going to get hurt by the tariff situation, because and second thing is, I draw attention, Mr. Joshi, is about the geopolitics. See, in geopolitics, there are no permanent foes or friends or enemies, right? But in geoeconomics, it can't be like that, because you set up plants and they're there for decades to last. Third, if there's any thawing of the relationship of China with America, right, in terms of the politics also, I would say that there's an advantage to India, because one of the ways then this whole situation gets rolled is that China can part manufacture in China, finish the product in India and export to the US. If it means that the US is not so anti-politically to China, they wouldn't mind this routing, because it'll be a win-win-win situation for everybody, because China knows that its cost of labor is very high. Finishing the product in India for Trump will be that the product was made in India, not made in China. There could be something, but I'm not saying that's going to happen, because politics is hard. China having supported Pakistan, it's very hard for us to really get, but mind you, we import $100 billion from China already. So politics is different from economics, is the point I want to make. And I think that ultimately, if we are smart negotiators, we can walk away with a good tariff deal in the BTA, if we put our hearts and mind to it.
Absolutely. Absolutely. And, sir, the events of the past few days have only complicated equations between US, India, China. Of course, Pakistan is very much into the picture as well. But we'll have to see whether China will sort of agree to manufacturing products in India and getting them exported to other countries of the world. Because India is looking at manufacturing products end to end from India, not in China. In fact, we've also seen the government come up with several policies with respect to boosting local value. We'll have to see how that piece plays out. But Mr. Joshi, what role do you think India can play in terms of recalibrating its trade strategy in response to a US-China trade partnership if that continues on solid ground?
See, the thing is that I think there is sufficient room for all three parties, as Mr. Subramaniam seems to suggest. Why I say this is that you know that since last October, China is trying to make up in political terms with India. So they do see India as a potential partner. Meaning we've been having a talk on our border issue that was stuck up. The Chinese agreed to status quo ante on the eastern Ladakh border. So I think that the Chinese view of the world, and I'm talking just 2 days ago, the Chinese issued their new white paper on defense. And one of the statements that they made there was they view the world as one with a great deal of turbulence, and they think that the role of China is to provide some kind of stability to this turbulent world. So that seems to be the strategic Chinese approach to the world in the coming period, meaning at least the next 4 or 5 years. So the Chinese have made up their mind that they are not going to disturb the status quo in any significant manner and that they will promote stability because the instability around the world is something which they find very dangerous to their own future.
Right, sir. But what a massive climb down by Donald Trump's administration, which was really not looking at making any sort of concessions for China. And of course, which is why the events of the past few days and commentary coming in from United States has been rather surprising. But Mr. Subramaniam, how are you seeing investor sentiment shape up in light of the US-China trade deal, particularly with respect to impact on Indian markets? Will monies continue to move into the Indian markets, or do you see some sort of an optimism coming in for China market and you see FIIs moving to China?
Just before this deal was struck, there was a survey done by an international broker, a very reputed broker, where India actually has pipped both Japan and China to be the active asset allocation compared to the benchmark, right, in terms of foreign institutional investors. Yes, with this China deal coming through, there would be a reasset to the extent that Chinese markets are not as relatively overvalued as Indian markets, and the fact that there were negative views on China prior to this because of the tariff. So there will be some readjustment of capital flows towards China, but I won't be at the cost of India, because I believe that there is enough room for both China and India to get the benefit of FII flows in this context, because this is a very temporary phenomenon. I mean, within a month, you will see an India BTA also being signed, which will turn sentiment in our favor. So I think, yes, the Chinese market will begin to look more attractive to FIIs, but not at the cost of India. And I see that India's economic situation is improving so dramatically. You saw the inflation data coming out, which is strongly indicates an RBI rate cut coming up in the days. You saw the GST collections being 12% year on year in the month of April. You've seen monsoon outlook being good. So I think now there are a lot of positives with the ceasefire coming in. A lot of the cloud hanging around India has gone away, and FIIs are coming back fairly strongly into Indian market for the last 15-20 days. So I think that relative to the fact that even in the index, right, China has a 28% share, India has a 18% share. So obviously China has a larger weight. They have been getting larger capital flows quite a lot of time. Most recently they did not, but now there will be a shift. But it should not be at the cost of India, because in growth rate terms, India is still at around the 6% mark, beats China, which is around the 4% mark. So I think that I don't see any shift in foreign flows coming to India. Maybe some other countries' flows would get reallocated to China.
Right, sir. Right, sir. So India growing at over 6%, China at around 4%, and the US is expected to grow at a rate of 2%. But let me come to you, Mr. Joshi. Now, with respect to this US-China deal, India was expected to get a deal first, and that's essentially what the Donald Trump administration also hinted at. But now news has also come that India has gone to the WTO to propose retaliatory tariffs on steel and aluminum. That presumably is being seen as a push against US tariffs policy. What is the sense you're getting on how this is going, how India is going to look at negotiating its trade strategy with the United States? Of course, the Union Commerce Minister is headed to US this weekend.
Well, I think that the WTO complaint is really a part of India's strategy. So I don't think there is a race out here, but I definitely think that the Indian bilateral trade agreement, will come faster than the deal with China. The China deal is still, as I said, keep on repeating, is a ceasefire. There is no certainty that it can be clinched, and there may be because they have some very substantial issues. Because Trump's concern over China are not entirely wrong. See, his problem has been in the way he has sought redress. He had tried to do it unilaterally. Now, we know that Beijing has manipulated trade, subsidized its industries, kept the value of its currency artificially low, stolen and coerced IPR, you see. So now the thing is that we all want redress, and the whole world wants redress from such Chinese policy. But the US would have been better off if it had made a coalition of countries like Japan, European Union, and gone to China and says, you got to end this. But the US has gone on its own. So now, but the US will negotiate on some of those positions. And that's not going to be easy for China. That's not going to be easy for China. And I think there the Indians have an advantage.
Word for you. Right. Absolutely. And we'll have to see how India capitalizes on the advantage that is being presented to it. But one final word from you, Mr. Subramaniam. Now that it looks like the US president is not so adamant on having his way on tariffs and is more than willing to cooperate with countries, what does this really mean for countries like India and several others who are looking at striking deals with the United States? What could be looked at in terms of the concessions which could be offered by the United States to India, for instance?
They mentioned India and Pakistan, of course, to say that he will look favorably at doing trade deal with us, even as close as yesterday. So I think that he said we will do a lot of trade with India. So I think that's a good phase. And I think the important point here is that the focus is less on tariffs and more on making India buy more of American goods. It's the deficit which is important. And I think India is well positioned because we import 85% of our crude requirements. Right now, it's Russia and Iran. And Iran, of course, after the sanctions, we have stopped. Venezuela, Saudi Arabia is where we buy. We'll shift a little bit of that to the US. So I think this will work out well for India, despite the feeling today in terms of the fact, they've signed with China, paused with China, what happened to us. I don't think that it will affect us. I think we have enough bargaining chips on the table to drive a good deal. Second is, Mr. Trump is proving to be pragmatic, that he's laid down his gauntlet, and now he's going about solving all these things so that things come back. So which means the world recession or any such thing will also get avoided, because ultimately everything will be done, the deal. Costs will go up for everybody, but the world may not go into a slowdown. So that's good. So the Trump in a deal-making mode and closing mode is good news for us. And I still believe that what Ms. Joshi said about India, see, with China, if you see, there are 3 countries which did not support this India-Pak, right? There's Turkey, Azerbaijan, and China. But Mr. Ajit Doval, our security advisor, did not speak to Turkey or Azerbaijan. He spoke to all the countries, but he spoke to the Chinese FM. So it's not like China is a pariah for us, right? And like he said, we have been moving closer. He actually explained this in the Indian situation with China. So I think that it's not that India, and we are a part of BRIC. Let's not forget that the BRIC is an important, and both India and China are very key of that.
Right.
So I think that ultimately a solution will come. And I think Mr. Trump's stance of relaxing whatever he said about China in terms of actions, I think show that even with respect to India and other countries, he will now be in a saying, okay, let's Do a deal now. Let's close it. If you want 10, I want 45, let's settle at 20. Whatever it is. I think that the uncertainty going away, right, is not going to be very far. And that's very positive news, not just from the economy, but from the market's perspective too.
Right, sir. So some bullishness coming in on as far as United States policy on tariffs is concerned. Gentlemen, you're stating that Donald Trump administration and Trump himself will be more open to making negotiations, to offering more adjustments, and willing to collaborate and cooperate as far as offering these trade deals is concerned, because the United States as an economy cannot really risk a recession or a slowdown, because it is eventually going to impact the US economy and its customers. Gentlemen, thank you very much for joining us here on ET Now. Ladies and gentlemen, geopolitics becoming more complex, but the kind of an impact it's going to have on geoeconomics, that we'll have to wait and see. But moving on to display of yet another unlikely bonhomie, while President Donald Trump used a state visit to Qatar today to announce a large purchase by Qatar Airways of Boeing jets, Trump said that the $200 billion deal for 160 airplanes was the largest order in Boeing's history that Qatar Airways has committed to. Trump arrived in Qatar on the second leg of his Middle East trip after meeting with Syria's leader earlier in Saudi Arabia. On Tuesday, Donald Trump announced plans to lift punishing sanctions that have crippled the Syrian economy. While in Qatar's capital, Doha, Trump is participating in a state visit that is scheduled to include a state dinner with Qatari leaders. Well, with that, ladies and gentlemen, it's time for us to wrap this edition of India Tonight. Hope you liked the show as much as we did putting it together for you. From me and the entire team, goodbye and thank you very much for watching.